Hi, everyone. This is Jason Bierk of Wall Street for Main Street. Welcome back to another Wall Street for Main Street podcast interview. Today's special guest is a returning guest. He's had amazing calls in the uranium market the last couple of years. He predicted a lot of this uranium bull market. Just some amazing returns. Him and I were discussing before we started recording how no one wanted to buy shares of Cameco when it was between $8 and $15 a share in 2020, 2021, and part of 2022. Now the shares, they were at $53 a share last week. They're down a little bit below $51 a share. He runs Uranium Insider. It was in a brutal bear market for a long time, but things seem to have changed, Justin, over for uranium and also for Uranium Insider lately.
Yeah, boy, have they. It's been really, honestly, an unforeseen and truly incredible sea change in sentiment around nuclear. And we can get into the weeds. I've got a long list of elements to discuss if we get into it on the big changes that we've seen, especially over the last 24 to 36 months. But yeah, you're absolutely right, Jason. I mean, going back, 6, 7 years when I first started looking at this sector, it was just hated. Nobody wanted it. The stocks were bombed out. Price of uranium was trading at 40% of where it needed to be for the actual cost of production for most of the producers. And finally, the sector recovered. The price recovered, stocks recovered. Some of these stocks have returned incredibly over the past few years. Some of them are still kind of in sort of consolidation mode, but it's full on nuclear renaissance as far as we can tell. And the headlines are just coming through a fire hose right now that are very bullish long term for nuclear energy. And it's gone from a story where the sector was hated, we just wanted the price to recover, supply was insufficient, to now we have a supply constrained market with a backdrop of demand growth, and the demand growth is pretty remarkable. So happy to get into any elements of that.
Excellent. And for listeners out there, I'm speaking to uranium and nuclear power expert Justin Huhn. He founded Uranium Insider. The uranium spot price is corrected a little bit, but it's still relatively high. I mean, I think the uranium spot price is what they got up to 110 or 120 a pound. They've corrected a little bit the last 3 or 4 months. It's down. The spot price is down to what, $83 a pound right now. Still a pretty healthy price.
It is, yeah. The price peaked out in this latest move at $106 in late January, and that was a move up from about $50 from 6 months prior to that. So it's been a historical move for any commodity, but for uranium to double in price in less than a year is truly a historical move. So the sector right now is continuing to kind of digest that move, consolidate a bit. The move down that we've seen in the spot price over the last week and a half has been on a few 100,000 pounds. It's not high volume selling. It's just a quiet market. We just had the World Nuclear Fuel Market Conference in Atlanta last week, which I attended, and the utilities are pretty comfortable right here. They've pulled forward a lot of material. They have flexed up on legacy contracts. So there's no real panic amongst the utilities. I mean, not whatsoever. In fact, one of these days I'm going to attend a conference. We're going to see utility panic. That's probably going to be a decent sign that we're nearing the top. So to see complacency amongst utilities is actually a pretty good sign for the continuation of a bull market, where during the conference you have multiple people in multiple panels on the supply side, the producers and the analysts like UXC and trade tech representatives, basically sending warning shots to the utilities in the audience, like, don't forget about uranium. We have a large and looming supply deficit here that doesn't seem to be correcting itself in the near future. So step up to the plate while you can is pretty much the messaging going out to the utilities. But they're still quiet. We're going to a usually quiet period of the year, the summertime months where the fuel buyers go on vacation, not a lot of action. But with all of that said, seen a little bit of volume kind of trade in here to the spot market, but all the while we've had big swings in the spot price, the long-term price continues to just stair step higher, seemingly month over month. We're at about $80 a pound here long-term. So it's been a big move for the commodity, a little bit of a quiet period here, but it's quiet until it isn't. We still expect a really big move for this sector at some point later this year.
So I want to ask you about energy policy out of Washington, D.C. and the European Union. Would you say that the policymakers now in both Washington, D.C. and the European Union, whether that's in Congress here in the U.S. or the White House and in Brussels in the European Union, would you say that there's been a paradigm shift to pro-nuclear power in the last 6 to 12 months with energy policy?
I would. And I would say that, leading up to that, you could see the signs there, especially in the United States. This started back 2018 with something called the Section 232 petition that was put forth by UR Energy and Energy Fuels that basically was asking the federal government to mandate that U.S. utilities buy 20% of their uranium needs from domestic producers. And that was proposed to the Trump admin at the time. He basically declined that request, but did establish the nuclear fuels working group that spent a year kind of digging into the situation essentially that 20% of our electricity in the United States is utterly dependent on foreign sources of uranium, 100% dependent. I mean, we produced almost nothing here in the United States over the past 10 years in terms of uranium. And we have some conversion and enrichment and fabrication here, but on the uranium side of things, basically nothing. So the result of the work, the nuclear fuels working group, basically were that we need to do something about this, and nothing was really done because the results of that came in 2020. You all remember what happened in 2020. So move on to the Biden admin, and the DOE in the Biden admin is hugely bullish and supportive of nuclear. And these, of course, are lifers. A lot of these people are lifers that have been with the DOE for decades, that have gone through various administrations, both Democrat and Republican, and finally, recognition for nuclear is there in the DOE in a major way.
Well, it
And
seems
so,
that the
yeah, go
policy
ahead.
for the Department of Energy has shifted in the last 6 to 12 months. I was going to bring that up because I think we're starting to see the failures of a lot of these ESG capital allocations with the mixing in of the infrastructure bill, the Green New Deal. They invested a lot in electric vehicles, a lot in solar and wind and biofuels and other stuff. And it appears that a lot of customers in a lot of different states, they're not getting cheap electricity like what was projected. And then a lot of the baseload electricity of technology companies, utilities, they need stable, cheap electricity for a lot of whether it's a consumer or industry.
Yeah, that's definitely the case, Jason. I mean, I'm out here in California where we have one of the larger solar grids in the United States, and we're paying the highest electricity costs as well. I'm paying almost 30 cents a kilowatt hour. It's very, very expensive compared to the average. It's almost 2x the average cost of electricity in the United States. So I think that, underlying the pivot to support for nuclear has something to do with kind of the physical reality of the expansion of renewables and how that hasn't lowered energy costs pretty much anywhere it's been done in the United States or elsewhere. So, and we also just need more electricity. Electricity demand is actually growing now after flatlining for 20 plus years. But some of examples of what we've seen in the last 24 months in the United States would be the passing of the Inflation Reduction Act, which had a bunch of pork in it, but it did have a lot of money there for clean energy production and clean energy investment tax credits, for which nuclear is able to access. So all of the utilities in the United States operating nuclear power plants are applying for life extensions. There's currently applications right now in for the Diablo Canyon, which has already been granted till 2030 and 2029. The Clinton reactor, the Perry reactor, Comanche Peak, these all have applications in for life extensions. They're all very likely to be granted. There's another dozen reactors that are going to have applications sent in to the NRC over the next 24 months. And they're likely to be granted because we just need the power. Physical reality is going to be forcing the hand of the regulators in very real situations in the next few years. We can get into energy demand, but I want to touch on a couple more points in the US just to hammer it home. This is the largest market in the world still. Will be surpassed by China in the next 5 years. But as of now, it's about 25% of global demand for uranium on a capacity basis for nuclear. So we actually saw the first SMR construction start in the United States happen just yesterday. That was TerraPower's Natrium reactor in Wyoming. This, I think, is the start of a very, very large trend that's going to last for a very long time. And what is that trend? That is that a tech company is putting forth the cash to break ground on a construction project for a nuclear power plant that has yet to even have NRC approval. So where you have utilities they're all interested in new nuclear, especially with the IRA funding in there for clean energy production and investment tax credits. But none of these guys want to build first of a kind. So I think we're going to see in the next 12 months announcements of construction permitting requests for new AP1000s in the United States. That's coming. But they all are interested in SMRs, but nobody wants to build the first one. Well, now you have Microsoft founder Bill Gates backing TerraPower, and they are starting on this construction years prior to an NRC approval. And I think that's a very, very big sign, something to watch. So we have life extensions. We're also looking at restarts. The Palisades reactor has 1.5 billion in funding coming from the DOE to restart that plant that was shut down 2 years ago, and now just announced today Constellation, the largest nuclear operator in the United States, is actually considering potentially restarting one of the two reactors at 3 Mile Island, which, I mean, if that's not a headline, I don't know what is. 3 Mile Island famously was kind of the nail in the coffin for the nuclear movement in the United States. And it was a major driver of the anti-nuclear movement in the 1980s that basically halted most of the nuclear projects in the United States. And I could just keep going, but it's huge to see this support in the United States.
And I also saw today on business television, I think it was on Fox Business, they mentioned 3 Mile Island and Constellation Energy, but I think they also mentioned that the state of Michigan was going to restart, that they were getting around $1.5 billion to restart one of the nuclear power plants too.
Yep, that's the Palisades plant that I mentioned. And another thing that happened in the past week was that the U.S. Army, past 2 weeks, the U.S. Army put out an RFP for proposals for microreactors, and these proposals are due in the next 10 days. They want to start operations of a microreactor by the end of 2030 at a site in the United States to actually power remote Army installations. And you know, they're going to be potentially buying uranium to fuel that program as well. I think the United States federal government, DOE, and potentially military purchasing is not on most people's radars, and it could be pretty significant going out for the next 10 years. And then the really biggest news, Jason, I would say, is the most recent banning of Russian uranium imports. There's waivers for the next 3.5 years, but starting in 2028, no more Russian uranium out to 2040. And on that ban, as part of that ban, was contingent $2.7 billion in funding that has now been released to support the domestic fuel cycle. And that's largely going to be through RFPs for enriched uranium. Importantly, these RFPs have a domestic uranium portion, a domestic uranium requirement. So an enricher that responds to this RFP is going to have to source uranium and conversion in the United States in order to fulfill that request from the federal government. So huge moves in the US that are pro-nuclear. Last week, Jennifer Granholm was congratulating the team for getting Vogtle 3 and 4 finally grid connected after a very long, drawn out and expensive process, but basically said, we need 200 more of these things, 2 down, 198 to go. That's a verbatim quote from the Secretary of Energy. It's really hard to believe I'm even seeing these headlines, to be honest.
Is that the nuclear power plant, the one in Georgia that was not on time and on budget, and what there was over $1 trillion in cost overruns?
Huge cost overruns. Yes, you're correct. Huge schedule overruns, and that was a big point of discussion at the most recent conference that took place in Atlanta, just a couple of hours away from Vogtle. And the main points really were that, you know, this process bankrupted Westinghouse, and Southern really stepped up, and the local government really stepped up to get the job done. And the lessons that were learned from Vogtle 3 were passed on to Vogtle 4, and the costs and the scheduling were much closer in line to being on time, on budget for number 4 versus number 3. So there's a lot of good momentum around this in terms of, okay, we've got the workforce that just completed this. We learned a lot of lessons, hard lessons from this construction. Let's do it again and guarantee the next ones that are built are going to be a little bit smoother and definitely cheaper.
And I think the Georgia governor, he just said publicly in the last month or two, he's been doing interviews and discussion panels that he wants more nuclear power, despite the nuclear power plant, like you said, not being on time and on budget, that they think that they can be more efficient and that they want to build additional nuclear power plants in the state of Georgia.
Yeah, we're expecting that. We're definitely expecting that. And some of the states that already have a lot of nuclear are obviously seeing the demand for electricity and the focus of growth in those states. Georgia has seen a huge industry growth in that state over the past decade, and they want to continue that growth. And part of that is making sure that there's abundant and affordable baseload clean power, and that's obviously nuclear fits that bill. To just briefly touch on your EU part of the question, you know, the EU finally did vote to include nuclear in the green taxonomy last year. And just this year, EDF, which is the large state-owned nuclear power operator in France, announced that they are going to have access to cheaper green, quote unquote, green financing due to this taxonomy vote, to life extend all 32 of their reactors. These reactors, they have 50-something reactors operational, but they've got 32 that were built in the late 70s, early 80s of similar design. They want to life extend all of them, and they just secured that funding through the EU's green taxonomy and green funding program. So that's, I mean, if that doesn't say which direction it's heading for nuclear in the EU, I don't know what does. We still have a couple of holdouts with phase out plans. Belgium Spain and Germany. Germany, there's a lot of vacillation back and forth on whether or not they're going to restart some of the reactors. There's two political parties there that are gaining steam that are in support of it, but not holding my breath there. Belgium chose to keep their two final reactors that are operating online for an additional life extended. I believe it was additional 10 years, so that's good to see. Spain, no real news out of there, but pretty much everywhere else in the EU is in support, either life extending their fleet or actually building new nuclear. In fact, Italy just decided over the past few weeks that they are going to look at nuclear again and consider new builds in that country after not building any nuclear power plants for multiple decades and effectively having a phase out policy.
And the European Union, or most of it anyway, does not have access to cheap natural gas. So they have to import a very expensive liquefied natural gas from either Norway or the United States or Qatar or another country. So that has costed them the last 5 years enormous spikes in electricity costs for a lot of their small businesses on the consumer side or for manufacturing. So they've been uncompetitive. There was a lot of factories in Germany that either had to shut down, fertilizer companies, stuff like that. So if you don't have, I think the lesson learned, Justin, over the last like 3 to 5 years, especially with the pandemic, but also with the spike in energy prices with oil and natural gas, is that if you don't have cheap, stable baseload electricity generation, I mean, your economy will suffer greatly in the long run.
Yeah, I think that's a really good point, Jason, and you're absolutely right, especially with natural gas and the clear weaponizing of energy that Russia has undertaken. Yeah, it's if you there's one thing to be focused on clean energy, it's another thing to be focused on energy security, and nuclear fits both of those bills. And just if you have natural gas power and you're reliant on the consistent stream of natural gas imports coming from the various countries you mentioned, that is a reliance that you have that is kind of out of your control. Whereas if you have a baseload energy source like nuclear that's underpinning the bulk of your grid, you can store decades worth of energy potential and nuclear fuel in a warehouse. And it's extremely beneficial for energy security. And this is one of the reasons why Japan is accelerating the restarts. In fact, there's 5 reactors that are ready to restart. We expect 2 more to connect to the grid and restart this year, with an additional in probably Q1 of next year. So that's a really good sign with Japan. But Japan, of course, imports most of their energy resources. So nuclear is a major benefit to a country like Japan.
Yeah, so natural gas price, especially liquefied natural gas imports, there's oil and natural gas drilling bans in a lot of countries, especially European Union countries. So they're not going to have any domestic supply. And then just the economics. I mean, on the consumer businesses, any regular person out there with a family or a small business, if you get an extra $1,000 a month electricity bill, you're going to start wondering what you can afford. You're going to have to cut back. And it's even worse for a large manufacturer at scale. If you're doing heavy duty manufacturing or a chemical plant, if your electricity costs were supposed to be projected at a certain level, and all of a sudden you get a big spike in them. So the economics are going to start to trump a lot of the ESG investments, because the return on investment, I would argue, for a lot of these ESG investments, they're not competitive with nuclear power over a longer time duration.
100% agree.
So I want to switch now to the supply side. So you've talked in past interviews about a huge supply side problem. We haven't seen the electrical utility companies start panic buying uranium yet, but they are starting to worry with much higher uranium prices. You mentioned on the last interview that they're starting to get grumpy buying a much higher uranium price. Yeah, their costs are up significantly. I don't know exactly how much their costs are up, but it's significant. How quickly can supply side, mine supply, increase in the U.S.? Would it be significant, and would it be from these mines that are in situ mining from like Uranium Energy Corporation?
It can't ramp up that quickly in the United States. There's a number of brownfield projects in the United States, and the fastest to restart, of course, like you mentioned, is the in situ, the ISR mines. So UEC, Energy Fuels, UR Energy, Encore Energy, Peninsula, all of these companies have ISR assets. Encore is actually starting to produce out of South Texas and looking at expanding into Wyoming at some point in the next couple of years. UR Energy is producing a little bit, Energy Fuels a little bit, and UEC is moving towards production. So we'll be able to get a couple million pounds out of the US, I would say in 2025. Within maybe 3 to 5 years, we could probably get up to maybe 5 million pounds per year out of the United States. So supply is responding. It's just slow to respond, and we're going to reach that point in the next probably 24 months where we're going to reach that quote unquote peak brownfield restart, where most of the producing projects of the previous 2 decades that can restart have or will restarted. So Langer Heinrich has restarted in Namibia. Boss has restarted Honeymoon in Australia. We've seen McLean Lake is producing in Saskatchewan. It's not that much, but Orano is producing out of that asset. We haven't seen Rabbit Lake restart by Cameco. They haven't announced that. We don't know if they will. But these smaller projects in the US as well restarting. So there's only so much capacity that can come on based on brownfield restarts. And once that is done, then we need new projects. And those new projects largely are expansions in Kazakhstan, Global Atomics DASA, and a couple of large projects in Saskatchewan. And unfortunately, all of these are either delayed or take multiple years to come online. So in the meantime, we have incremental supply starting to kind of trickle into the market, but we also have demand growing, and demand is growing at a pace that, as far as we can tell, is outpacing the restarts and the increasing in supply. So from what we can tell based on our modeling, if the big projects get restarted, so this is NextGen's Arrow, this is Kazakhstan's expansion. They have announced last year that they expected to be producing 80 million pounds of uranium in 2025. They, of course, revised that down earlier this year. And in our estimation, it's going to be probably 3+, maybe even 4 years before they can approach even halfway to that target. But the Saskatchewan projects, the big ramping in Kazakhstan, these are the big new mines that are going to have to come online to balance that supply. And if they do, then we're looking at getting close to supply balancing demand, maybe 2029, 2030, but it's a blip. It's a moment in time because we have existing assets with decline rates at the same time. So we need a lot of new supply to come online. Potentially, if we have high enough prices for long enough, we could see some innovations in other areas where uranium typically has not been sourced from before. That could be seawater, that could be phosphates, things like that. But these all just take a very, very long time. And I sort of had this realization, Jason, at the most recent conference, where I've had this realization a couple of moments in the past, but it really hit home during this conference because we had a panel and there was a representative from one of the US utilities on the panel. And he basically said, we don't want to chase price spikes, and the industry doesn't want price spikes either. We want a stable market. And I was just thinking, like, yeah, good freaking luck with that. I don't know how this industry can avoid huge spikes and huge troughs. And it's because the utilities, they have no incentive to time the market. They have no incentive to predict the future pricing environment. They buy when they need to buy. And utilities did not come forth in the later part of the last decade, earlier part of this decade, didn't come to the Camecos and the Oranos and the Kazatoproms of the world and say, okay, you guys, what do you need to expand supply? Because our forecast shows we have an undersupplied market, 5 years from now. What do you guys need? That didn't happen once. They pay the market prices when they need to buy uranium. So supply inherently is slow to respond. And I just don't think these huge swings are avoidable in this market. And I think we're in the first couple of innings. In my estimation, we've got many, many years of demand growth and supply constraints ahead of us. So are we at the contrarian very beginning of this market? No, we're not. Are we in the euphoric highs? No, we are years away from that as far as we can tell.
And so these in situ mines, they can restart mining more quickly than, say, Cameco restarting Cigar Lake or McArthur River, because that's conventional mining, right? So the in situ can be restarted much faster. But like you said, the supply it would bring online is very, very small. So these are not going to drastically help the supply-demand imbalance that you've been talking about for the last couple of years.
Exactly right. Yes. And the Kazakhs and the Uzbeks can expand a bit faster with ISR than the United States project. And the United States projects are smaller, they're lower grade, they're smaller. But the Kazakhs are having their own issues with sulfuric acid availability primarily. And the big new project that they are expanding into is the Budenovskoye 6 and 7 deposits, which is a joint venture with the Russians. And the first, I think, three or 4 years of production from that mine is going exclusively to Russia. So even if they can expand that, which is taking far longer than they expect, is that production is just staying in Russia. The Uzbeks are ramping, but they're nowhere near the rates that Kazakhstan was able to ramp. They have already revised down their production increase expectation to 50% increase by 2030, over 100% increase. So we'll get another 3 to 5 million pounds out of the Uzbeks by 2030 on an annualized basis. So that's something, but it's not a deficit filling expansion. And you're right with the big new projects in Saskatchewan. Denison's Phoenix is an ISR project. They're waiting for the last couple of permissions to be able to actually start building that project, but they've already proven that it works. But that's, it's a chunky amount of production for the first couple of years, but it declines pretty rapidly after that. And NextGen's Arrow is the big one, almost 30 million pounds per year for the first 5 years. But that is the largest mine and mill ever built that's being proposed. And it's quite deep. It doesn't have the water intrusion challenges that Cigar Lake or McArthur River has, but these big projects, they never get done on time and on budget. And that's not to say anything bad about Denison or NextGen or anything. It's the nature of mining, and it's especially the nature of uranium mining. So, there was one presentation that was at this conference done by Treva Klingbeil from TradeTech. That's one of the primary nuclear fuel analysts. And her entire presentation was about supply risk. And she had a graph showing timelines from uranium deposit discovery to production going back to the 1940s. And from the 1940s and 1950s, the projects were going from discovery to production in less than 5 years. And this chart basically moves up like a hockey stick. And over the past 10 years, projects that have come into production were discovered 20, 30, 40 years ago. And so it's just this bureaucratic red tape. It's so many various challenges that just did not exist 50, 60, 70 years ago. And that's just the reality and the nature of this market. So we expect to see continued upward pressure on the price. Generally speaking, we're going to have pullbacks, we're going to have consolidations on the way, but we don't see any supply windfalls that are going to fix this deficit at least for the next 3 to 5 years and possibly longer.
And I think you said that in terms of like being able to increase mine production in the past, or at least in the last decade, Kazatomprom in Kazakhstan, and then also African uranium mines could restart and build faster. But Kazatomprom has even not been able to hit their production guidance lately. Now, you said what, in a couple of years they could potentially turn things around, but that's a lot of big ifs there, if they can actually turn it around or not.
Yeah, so the big challenge for them is mainly sulfuric acid. There's also some challenges with drill rigs, with skilled labor, and things like that that are challenging to any producer, really. But the big one is sulfuric acid. They're just started constructing a new sulfuric acid plant that's going to provide, I believe it's another 800,000 tons per year. And they currently are producing 680,000 tons per year. The rest of it they have to buy, and they're utilizing a little more than 2 million tons per year. So, but to expand to 75, 80 million pounds a year, they're going to be between 2.5 and 3 million tons of sulfuric acid per year. And the expansion aspect, the actually drilling out and injecting the impregnating of the deposit with the lixiviant takes a lot of acid. So typically they will buy this from Russia or from the in-country producers. But until they have that new plant online, or there's a windfall of supply of sulfuric acid from elsewhere, they're not going to be able to expand. There's just physical structural impediments to doing so.
Is that in situ mining that you're describing? So it's not the traditional hard rock mining where they take this ore, a lot of it's uneconomic, and then they move it on a conveyor belt and they crush it down into a powder, and they're using a bunch of chemicals. So in situ mining is vastly different than traditional hard rock mining.
Yeah, in situ uranium mining is essentially a series of wells. So they drill out a well field. They have injection and recovery wells. And the deposit that exists between the injection and recovery wells will be impregnated with that sulfuric acid solution that binds with the uranium and is extracted through the recovery wells. Then they have a solution that they can process further to extract the uranium out of. Yeah, exactly right. They don't have to deal with any milling, any actual hard rock mining or milling. It's all done underground in aquifers, essentially.
Okay. So it sounds like chemical intensive. Is it very energy intensive, or are they just waiting for evaporation or something like that? Because I know like some of these potash mines also have kind of like evaporation or in situ mining.
It's primarily chemical intensive. Yeah.
Okay, so they're not using a ton of electricity like hard rock mining, which is like insane in terms of like diesel and electricity to get the ore down to like a fine little powder, and then all the chemicals required to separate it out into economic ore.
It's far less energy intensive than underground or open pit mining for sure.
Okay, that's interesting. So these small cap uranium producers, so they kind of sound like speculations or a trade then. that where they can increase production quickly, but they don't have a lot of additional growth after that. So you would say they're very speculative then, where over the next like year or two, they can add a lot of cash flow, but then they don't have a lot of future long-term growth with a stable, low-cost uranium mine.
Well, it really depends on which company you're talking about. So there's plenty of companies that have initial projects that they're coming online that, and every company is going to tell you they have blue sky upside potential, right? That's just part of the sales pitch of every single company. But there are some companies that do actually have follow-on projects. I mean, Denison is one of them, right? So Phoenix is their big target because they're exploring ISR there. But they also have the Griffin project, and they have a technology with Orano. Orano is the primary owner of this technology, but it's called SABRE, which is Surface Access Borehole Recovery Extraction. I think I have the acronym correct. And it's basically you're drilling down to the deposit, to the actually core of the deposit, and there's like a horizontal jet boring process that will break up the ore with high pressured water, and then that slurry is extracted through the same device that drilled the hole down to the deposit. And Orano is actually utilizing SABRE right now at McLean Lake. They have capacity at McLean Lake Mill, and the McLean Lake deposit they're utilizing SABRE. I think SABRE has huge potential going forward in the future. So Denison is one company that they've got this initial project that's their focus, but they've got a couple other projects in the background that will be coming online kind of sequentially. And some of the smaller producers or developers, I should say, in the United States also have multiple projects that they can stair step into, assuming that we have a continued supportive market with the price of uranium and contracting volumes and things like that.
And Denison is backed by the Lundin family, so they're mining royalty. They've been successfully investing in oil, natural gas, and mining companies for decades. So I think they could easily raise capital if they need to.
I don't think they have a capital problem.
Well, I'm just saying if they want to build another mine or something, whereas like a smaller uranium miner that doesn't have like the Lundin family backing it might have some issues.
Yeah, it depends. The capital availability doesn't seem to be a major problem, but that of course depends on the jurisdiction. So for example, Global Atomics is developing the DASA project in Niger. Niger had a coup last year. The banks are still considering whether or not they're going to be willing to lend to the project to finish the development. So that's one company that's been waiting for the banks to confirm or deny whether or not they're going to be offering up a debt funding. So this is one project, and that's 100% jurisdiction based. Even though the World Bank is approving the country for investment, it's just one jurisdiction. Where most of these other projects, especially with these higher uranium prices, don't have any problem accessing capital. Like NextGen, for example, they're gonna spend $2 billion to develop Arrow and probably more, and they've got 1.5 in expressed interest already. Just saying, hey, you guys just tell us when, we'll write a check. So a lot of these projects don't have any problem accessing capital at this, especially at these prices.
And China and India, are they setting up like government agencies to make it easier to build new nuclear power plants? Is that why they're fast tracking a lot of these things?
Well, India, really interesting. The NTPC in India, which is India's largest power producer, they're planning to build 10 gigawatts of nuclear in the next decade. And until now, the only nuclear operators in India is the Nuclear Power Corporation of India, which is basically state-owned. So we actually have a private company that's the largest power producer, but they don't operate any nuclear, saying we want to get into nuclear. They're setting up, they want to spin off part of the company that's going to be publicly traded, that's dealing with renewables and nuclear. They have various branches of their company that they're establishing to fast track the building. So that's, India's doing that. They also have done kind of fleet mode nuclear. They have two reactor types that they've built multiples of. One is a heavy water reactor, another is a Russian VVER. And so they have kind of the fleet mode style. They're accessing uranium from Russia. They have no qualms about buying there. So they should be able to fuel these reactors no problem. China is also sort of utilizing primarily a couple of different major designs. One is the Hualong. I'm forgetting the name of the other one. But these reactors, China is building, I think 27 reactors are under construction right now. They're going to be the largest nuclear operator in the world in 5 years' time. So they seem to be on pace to come close to their target. Their target is 150 gigawatts by 2035. And they right now, I think, have 54, 55 gigawatts. So what is that, 7 or 8 reactors per year for the next decade? It's going to be a challenge to hit that, but they're currently right now, I think they've been 6 or 7 construction starts per year in the last 5 years or so. So they're by far the fastest builders of nuclear.
Have you seen any of the charts with China and India electricity usage demand growth? I mean, not just nuclear power. I mean, we're talking electricity usage in general. It's in a full bull market here. The amount of electricity usage, and India is benefiting from factories like reshoring. There's a good amount of factories that have left China and heading to India, so manufacturing too. But overall, like their emerging middle classes, they're using a lot more electricity. So like the electricity usage demand growth out of China and India, it's surprising to the upside, especially India. The numbers are just insane lately for natural gas demand, coal demand out of China too, and then nuclear power, which is underway.
I'm not surprised to hear that. And I have seen some of these graphs. They're pretty striking. Just to think about the two most populous countries in the world, kind of getting wealthier and modernizing, especially India. It makes sense that their electricity demand would be soaring. And I mean, we're seeing that in the quote unquote modern, the modern world in the West, the developed world, let's call it, that your electricity demand is rising substantially. And a lot of that is being driven by data centers and AI. And this is such a big theme. I know we were chatting about it before we hit record, but this is such a huge theme that came out of nowhere, and it really has sort of shocked the industry in significant ways. And I'll give you a couple of examples of how quickly this has shifted, Jason. It's pretty shocking. So Dominion, which is the largest, which is a nuclear operator in Virginia. And Virginia, as you know, has the most number of data centers in the United States. And just to kind of backdrop this segment, let's call it, 4 out of the 5 countries with the most data centers are heavily dependent on nuclear. That's the United States, China, Japan, and the UK. And so in the United States, Dominion, which operates nuclear power plants in Virginia, they have 15-year plans for their expected energy demand. So they made a 15-year plan in 2021, and they expected single-digit growth going out 15 years in electricity demand. They just revised that plan earlier this year, or maybe last year, excuse me, late last year. That plan now, they expect their electricity demand for Dominion to double in 15 years. So it went from single digits to 100%. That's how quickly this is shifting, and it has everything to do with data center demand and AI. Of course, there's incremental demand increases being supported by more electric vehicles being sold and connecting to the grid, certain jurisdictions mandating electric heat, things like that. These things are all happening at the same time. The electrification of everything is part of the quote unquote net zero plans. But really, the data center demand is huge. And I can give you 2 more examples of that type of growth, but it's really come out of nowhere.
Yeah, I totally agree. I actually started researching this 6 to 8 months ago. I found a chart with projections from the International Energy Agency, IEA, by accident. And I was shocked at what they were projecting with electricity usage demand growth. Excuse me, sorry, little allergies from things like Bitcoin mining, electric vehicles, and then data centers. And their base case was that electricity usage by around 2028 would double. And so then that was the first time I found this out, like about 8 months ago. And then I started researching this more. You mentioned Dominion Energy. I mean, they're our utility company here in the state of Virginia. So they don't own just nuclear power plants. They
Correct.
all types of electricity across the gamut. They disclosed in December that the current data centers, and these are not even the new next generation ones that are going to be built, that are 1 gigawatt to 5 gigawatt ones, which is what all the big tech guys like Mark Zuckerberg, Amazon, OpenAI, all the big tech companies, Microsoft, all of the big tech companies are talking about data centers now. And it's already 20% of the state of Virginia's electricity usage. It was disclosed in December
Wow.
by Dominion Energy. It's solely from data centers.
Wow. That's enormous. Yeah. And the largest nuclear operator in the United States, Constellation, in their most recent conference call, a slide deck, they had a graphic just highlighting the data center demand and the growth they're expecting. So they basically said that in 2022, the data center electricity consumption in the United States was 126 terawatts. They're expecting almost 400 terawatts by 2030. So that's more than a tripling from 2022 to 2030. They're expecting tech companies to invest $1 trillion in data centers in the next 5 years in the
Wow.
US. Data center racks require up to 7 times more power than AI data center racks than traditional data center racks. So AI is a major accelerant to this demand. It's just absolutely massive. And there's a graph from McKinsey data center demand model that was put out by B of A. They're showing gigawatts of data centers. So combined, just regular data centers and AI, 12 gigawatts 2023. They're expecting that to be 40 by 2030. It's just wild. And it's really an interesting theme here, Jason. I'm curious kind of what your thoughts are on it, because I've heard two different takes. One is from Doomberg, who I'm sure you're familiar with. And another was on a commentator recently on the Odd Lots podcast put out by Bloomberg, ironically, Bloomberg and Doomberg. So really what they're both saying is AI is growing, and I agree with both of them basically that I think electricity availability is going to be a limiting factor to AI. And what Doomberg is saying is that they're not going to say no to AI. So basically, as big tech builds out these data centers, AI continues to grow, that AI is going to have kind of first rights to this electricity availability. And the folks on Odd Lots and the person they were interviewing, I'm forgetting his name, my apologies, basically saying, well, if you have the option to allocate electricity to, let's say, a Tesla factory versus a data center, you're going to choose the Tesla factory because of jobs. And I'm kind of taking the other side of that because as far as I can tell, Jason, I think that AI is sort of like Internet 2.0. I think it's going to become embedded into everything that we do in a very, very short period of time to the point where it's absolutely necessary. So, when the internet first came online, it was a novelty to be able to send an email to somebody, to be able to quote unquote surf the web. Now we can't do without the internet for the functioning of the global infrastructure. I mean, we can't do without it for a day. And I think that's where AI is going to go. So right now it's like you can have a more accurate and faster search query with ChatGPT or Perplexity, whatever it might be. I use Perplexity every day. But I think that it's going to be embedded into the entire functional
Well,
tech infrastructure of modern life. And I don't think they're going to be able to deny its electricity needs. And that physically is going to force the hand of governments and of utilities to provide electricity. What that means for various sectors, for nuclear, I think the opportunities and the shift that's happening is absolutely enormous.
have you seen any of the statistics comparing like a regular Google search or Mozilla Firefox, any of the regular internet browsers versus using ChatGPT for search? Have you seen the electricity usage demand per search?
I've seen anywhere from 7 to 10x the electricity demand per search.
Yeah, so it's around. There's some estimates saying it's more than 10x. So if more people switch over to using artificial intelligence based search engines, and we're seeing that with the processors, but those are next generation data centers. So the current data centers use a lot of electricity, a lot of water. They cause a lot of rise and spikes for electricity bills. The next generation ones are even worse than that. I mean, we're talking potentially an order of magnitude larger. They require even more baseload electricity. They require even more water. They burn through advanced semiconductor chips like crazy. It's similar to a Bitcoin mining operation. I mean, Bitcoin mining goes through semiconductor chips very, very quickly. I think only 2 or 3 years the chips last. So they have to constantly replace them, constantly upgrade. So you're
Wow.
talking about whereas like with the big technology companies in the past, they could grow and get earnings growth and free cash flow with software, and they could just do a software update or a software upgrade, and it would be low capex compared to actually building out all this infrastructure. I mean, Microsoft and OpenAI are talking about building $100 billion capex 5 gigawatt data center for artificial intelligence by I think 2030.
It's incredible. It really is incredible. And I think that, the easy answer for what this means for nuclear is that the countries that are operating nuclear and also have large data center establishment and potential growth for data centers, like I mentioned, Japan, China, the US, and the UK, all of them are going to see life extensions, not necessarily across the board, but a lot of life extensions of their existing fleet. What this growth rate means for new nuclear, I think, is yet to be seen, but I think we can look at a couple of examples. One of them, like you mentioned, Microsoft's investment. Microsoft, their co-founder, of course, or Microsoft's founder, Bill Gates, is a co-founder of TerraPower, which is breaking ground. They're building nuclear. There's plenty of intention to have nuclear operational and providing electricity for these data centers. Now, of course, it takes time to build nuclear plants, and that's time seems to be in short supply for the rate of growth that we're looking at. So we could see an all of the above electricity sources to power this trend. But we can also look at examples like in the UAE. The UAE just built 4 units at the Baraka plant that was built by a collaboration between the UAE and South Korea. Probably the nuclear success story of this century. Just absolutely phenomenal. On time, on budget. This is an oil-rich country building nuclear. Well, what is the UAE doing now? They have a request out right now for proposals to build 4 more large nuclear reactors, and they're kind of outsourcing it, or they're crowdsourcing, I should say, getting proposals, I believe, from the French and the Chinese and the Russians, potentially the U.S. as well. And what exists in the UAE? The UAE has G42. This is a major AI data center company. They've got collaborations with OpenAI and Microsoft, cloud computing company, and they are growing very, very rapidly. And the UAE can see that, and they're going to build more nuclear. So hopefully, what we see is a continuation of this trend that it's not the we need this power right now in this arms race, which I think it's going to be, at least for the near term, which is beneficial for de-risking operating plants. But if we want stable baseload and clean, if these companies want to check that ESG box, nat gas plants can be built faster and they're the cleanest of the fossil fuel plants. But does that really check the ESG box for companies like Microsoft, for companies like Amazon? Not really, it doesn't. So we think this is the beginning of a really, really big trend and a major tailwind for nuclear.
And the next generation data centers, the construction hasn't really started on any of them yet. So over the next 2 or 3 years, that construction is going to start. So we're just talking about the planning stage where they're buying the land. So if people go and look up on search like Northern Virginia, the local business journals here for like Amazon and Microsoft, I mean, they're spending over $200 million buying large amounts of land packages all over Northern Virginia. Amazon just announced that they're going to build a university-sized campus solely for next generation data centers. So that's going to use a lot of energy. The Washington Post put out an article back in February, I think, talking about a lot of the stuff that Justin and I have been talking about for the last 5 or 10 minutes. And the expert quoted in the article said, basically, if all these next generation data centers get built, Northern Virginia is going to need 2 new nuclear power plants built so our electricity bills locally don't go up enormously.
It's amazing. It's really amazing. And it came out of nowhere. And there was a great presentation from a representative of multiple Japanese utilities. The presentation at the World Nuclear Fuel Markets last week in Atlanta, and this gentleman was showing the expectation of electricity growth in Japan, and this was also from 2021. They do these 15 or 20-year plans, and this is the 6th plan that they've done. And in 2021, they expected electricity from 2013 to 2030 to drop by about 15%, almost 15%. They're revising that plan. It'll be out later this year. They're expecting electricity demand to grow. And that's, of course, in Japan, which has a pretty steeply declining demographic, very low birth rates. And the country is trying to support, the growth of their population in various interesting ways. But they, even in a declining population environment, are expecting electricity demand to grow. And that's the latest plan was just 3 years ago. And they're already seeing that monumental shift. So I think it's a huge trend, Jason. It's quite startling.
Now, what you talked about between the two different views on the Bloomberg, the expert on the Bloomberg, and the other view, I think there's kind of a middle ground. And the CEO for MicroStrategy, and he was headquartered here in Northern Virginia. So MicroStrategy does big data, artificial intelligence. They have a lot of government contracts. They're headquartered in right near the Tysons Corner Mall. And the CEO, Michael Saylor, he's a pro Bitcoin guy, and he buys Bitcoin for MicroStrategy's balance sheet. But what he said is kind of a middle ground. He said that big tech is going to pressure like politicians, I guess through lobbying, or the politicians they buy and own or whatever, into making sure that these data centers, that they have reliable, cheap baseload electricity next to the data center. So either there's already a nuclear power plant nearby, or they're going to have to build them. And he said that basically like big tech is going to make sure that the politicians and the bureaucrats and the other regulators get a lot of this stuff funded so the data centers have stable electricity nearby.
It makes a lot of sense. And I mean, I think a perfect example of that was earlier this year when I think it was in February when Amazon Web Services bought the Talon data center, which is in Pennsylvania, just right adjacent to the Susquehanna nuclear power plant. In fact, one of the 2 units at the Susquehanna plant was taken off the grid to exclusively power this data center. There's not that many opportunities for that to happen in the United States based on the actual sensitivity of the grid and just general demand. But it's the peak demand that's really going to be a big concern. So renewables, it's tricky because you have to have the power for these data centers 24/7. And renewables obviously don't produce 24/7. And so what about batteries? Okay, well, how many cloudy days do you need to account for? How many windless days do you need to account for in that battery bank? That gets expensive. These batteries don't last forever. There's not a great recycling program for these batteries. So it might be a faster solution in the interim, but it's not a very good long-term solution. So it's possible that we see various other means of producing more electricity sooner on kind of in conjunction with a longer term base load plan of producing nuclear to supply these things. So it'll be interesting to see how it plans out. But as for now, we're certainly seeing an appropriate pairing of nuclear and the growth of AI and data center demand.
Well, the short-term plan to power the data centers more here for Dominion Energy is there's the Marcellus Shale in Pennsylvania and West Virginia, Marcellus and Utica Shale. So EQT and some of the other producers are working on getting the legislation and the approval to get pipelines set up so they can move the natural gas down here to Northern Virginia and DC metro area for the data center. So that's like a short-term temporary solution, and that will help. But the long-term solution probably for decades then is setting up more new nuclear power plants because if you look at the business journals for like Microsoft, Amazon, I haven't seen any yet for Meta, but it sounds like Meta and Facebook are going to be doing it too because Mark Zuckerberg just said it on a podcast that he wants to start building 1 gigawatt data centers, which are substantially more than the current ones that they have right now. Yeah. So he basically he said he wants to get into that too because he's been talking about the metaverse, but the metaverse is a back burner project now compared to all the other stuff that is being integrated with artificial intelligence.
Right. Yeah, that makes a lot of sense. And I think that there's a lot of concern about the time frames for building new nuclear in the United States, which are pretty justified at this point. But there actually are 30 sites in the United States with existing nuclear power plants that are permitted to build additional units. So most likely the growth of nuclear in the US will be additional units at existing sites. And like I said, I think we'll hear announcements within the next 6 to 12 months of plans for new large AP1000s that'll be built at existing nuclear sites. And hopefully, knock on wood, we'll do that a little bit better and a little bit faster and cheaper than Vogtle. And I think that we will based on the lessons learned there.
And I think this is a long-term trend. This is probably now that it's relatively new and no one knew about it 6 to 8 months ago. Now people are starting to research this. Some of the shares, so whether it's like data center servicing companies, real estate investment trusts, and there's about half a dozen that pay a dividend and cater to data centers. This is a long-term trend. The shares have gotten ahead of themselves, but we need to build the infrastructure, like Justin said. We have to have the stable, cheap baseload electricity. We have to have the power line set up. So all this capital expenditure, CapEx, whereas with the big technology companies in the past, what they only did software. They didn't have to do this type, maybe since the 1990s, of initially installing high-speed internet, right? All that infrastructure with the cables and the fiber optic cables. They didn't have to do all this enormous capital expenditure for actual hardware and buildings and upgrading technology and reliable electricity. They didn't have to do all this for the last 15 or 20 years. And now for their next leg of growth, the next leg of innovations, they have to do all these. They have to lay in the foundation for electricity and infrastructure and data center buildings and upgrading hardware.
Yeah, and it's interesting to recognize the limitations of available, let's say, available skilled workforce, available supply chains. These are going to be major constraints and challenges for the expansion of, well, pretty much anything, really. But the expansion of nuclear is going to have come up against these challenges. But I tend to have a bit more faith, for lack of a better word, in the big tech companies to get it done. I mean, to quote somebody from the recent conference, and it might have been Tim Echols, who's the public service commissioner in Georgia, who had a kind of the keynote talk at this conference, and he basically said the tech companies, they need the power and they have the cash. And when you have the money to basically write a blank check and say, this is what we need, get it done. I mean, it's very compelling, and they're not going to just let this opportunity pass them by, in my estimation.
Exactly. I mean, Microsoft just spent $500 million on land for data centers in the last like 6 to 8 months here in Northern Virginia for another land
Wow.
package. Amazon spent billions of dollars in the last 12 to 18 months on land packages, securing land so they can start building like a university sized campus solely for next generation data centers.
Incredible. Incredible. It's gonna be really exciting to see how it plays out.
Yeah, it's not gonna happen right away. I mean, people are gonna have to pay attention to the press releases for when construction starts on these data centers, and this is a they're not there's not a model for doing all these things exactly properly, right? So I think there's going to
Mhm.
be some capex overruns and cost overruns, but they will get built because it sounds like the CEOs and the companies are committed to this. So I don't know if they're going to come in on time and on budget, if they're going to come in by 2028, because the projections are saying like by 2028, some of the electricity demand growth is assuming all these data centers are built by 2028 and electricity doubles.
It's pretty wild. The numbers are pretty shocking. So it's a little bit scary to be completely honest. I mean, I'm very bullish energy, bullish nuclear, and this is one of the reasons. But part of me is like, well, maybe available electricity should be a limiting factor to stem the growth of this monster. I mean, hopefully, I'm an optimist generally speaking, but we don't want this thing to get away from us. So hopefully, it can be expanded responsibly and will be useful for humanity. But either way, as an investor, as somebody who's looking at what is happening and not necessarily what I want to happen, it's important to recognize where this train is headed, and it clearly is headed in that direction and seemingly with a lot of momentum.
Yeah, I agree. The most optimistic one I saw, I think, was that global electricity demand usage would go up almost 5x by 2034, 2035. So that's if all these data centers that are being projected actually get built out in the US, European Union, Japan, China, India, then we're looking at an absolutely insane increase in electricity demand usage.
I'm ready for it.
Well, I got one more question. I got patrons emailing me asking me about this. So there's a uranium royalty company. I don't know if you cover it, but they have really small royalties. They started a few years ago. They didn't have any cash flow years ago. It was overly marketed when the company started. Are they going to benefit from this trend? Do they have royalties? I don't know if you cover the company. Do they have royalties on some of these smaller in situ mines from like Uranium Energy Corporation and the others that are going to cash flow soon?
Well, I generally kind of shy away from speaking about individual companies publicly, but I have looked at this company. I do know Scott Melby. I've met him multiple times, who's one of the operators of the company. And they have, I think when they established a number of these royalties, they're really, really out of the money call options, essentially. And I don't think some of these royalties that they ever expected would be returning any cash flow. And at this point, the tide has shifted so significantly that they probably have some far out of the money call option royalties that possibly will be producing cash flow at some point. I mean, just looking at the chart itself, it has a lot of torque when the sector really goes risk on. So it's not something I would blame anybody for owning, but I can't really give you any high level takes on valuations or anything like that.
Yeah, I mean, I haven't looked at the company recently. I looked at them years ago and I was like, well, these are on uranium mines and there's no cash flow here for years at least. But like you said, it is a call option though, but they're small little royalties on small little uranium mines, but some of them may actually cash flow. I could see them getting bought though by like an Altius Minerals. I don't know if you're familiar with Altius Minerals because you focus just on uranium. Altius has like royalties on all these different commodities like coal and platinum and palladium. I think they have a few uranium royalties, so I could see Altius maybe wanting to buy them.
It's anything is possible. Yeah, it's certainly possible, and I think that at some point they're going to be significantly cash flowing. How far down the road is really hard to say, but I think, like I said, a lot of their projects that they probably had never hoped would be producing are likely to produce, and they probably scooped up those royalties pretty cheap.
Oh, last question here. I forgot to ask you this. Okay, so I see a lot of different articles, bull case, bear case for Cameco. The bear case for Cameco that I've seen from hedge fund managers that are saying like you should avoid it now, all the gains are made in the stock, is that they're too hedged from the bear market with the uranium production. How much is Cameco hedged with their uranium production right now?
Their realized price of uranium is pretty low compared to the present spot and term price. They signed quite a bit of contracts that were, majority fixed price in the later part of the last decade that are being delivered on now, but they sort of have a lagged effect. They're signing enormously profitable contracts right now for delivery later in the decade into the 2030s. So The company's fine. They're in a fine cash position. That quote unquote hedge certainly is contributing to less cash flow than you might be expecting from a company like Cameco. But at the same time, I think that their 49% ownership of Westinghouse was and is an absolute slam dunk. And it's certainly possible that that is going to be the primary driver of their story going forward, not the uranium mining part of the story. I'm just seeing how things have shifted is pretty incredible. So that was a brilliant move that they made that the market kind of faded and didn't really have, and still largely I would argue the market really kind of has no idea where this could go in valuation terms. Like I don't think you can even analyze the potential profitability of that ownership. I think it's literally impossible to analyze. So it's a huge blue sky upside for the company. And yes, their realized uranium price is quite low compared to the existing market price, but we've also just seen a huge jump in the market price. And everybody's like, oh, they have to buy so much uranium. They don't have to buy that much uranium. They can borrow, they can pull forward material from partnerships, et cetera. So I think they're in a perfectly fine position. But uranium investors clearly would like to see them have more exposure to these higher prices, and that'll come in time as the years pass. Their contract book starts to look better and better and better, and we get into the 3, 4, 5 years down the road. They're printing cash, so I think they're okay. They're in a fine position. But yes, if you look at the graphic from their latest conference call and their realized price, it's pretty low, especially compared to the existing price environment.
Well, as we've discussed in past interviews, I mean, they had to survive the bear market. I would argue that the uranium bear market from Fukushima to 2020, it was probably the worst bear market of any commodity for many, many decades. The bear market was absolutely insanely bad. I mean, there was no capital available. It was shocking. Kazatomprom kept bringing on more and more supply, and the uranium spot price kept going lower. Then the Japanese utility companies kept dumping uranium back onto the market when they closed all the reactors post Fukushima. So it was basically the worst case scenario, the perfect storm of bad things that could happen for the entire uranium mining sector. And yet Cameco managed to actually survive. So I would say they did okay. I mean, they managed to actually survive. They didn't go bankrupt or restructure the company or anything. Are they hedged like 50%? How much of their are they hedged 20%? How much of it is hedged right now?
Well, their previous contracts that they sold, later part of the last decade, let's say early part of this decade, and they started to shift to higher prices, but those were all partially referenced to the market, partially fixed. So those fixed price contracts that they signed, let's say late 20 teens, were likely in the mid to high 30s, even low 40s. So the part of the book that is referenced to the spot price balances that out. They average out their realized price, I think, of the last quarterly report was in the 50s, if I recall correctly. So it's not terrible, but to the extent that they have to buy pounds in the market is where it hurts them. So if they have to buy pounds, above $90 a pound, they're losing money on that. And but they don't have to buy that much uranium, and they're completely fine. And honestly, the contracts that they signed, in '06, '07, '08, hedged them to the downside, or to the upside during a downside move in the commodity during the bear market you just described. Part of the reason the company did survive was those long-term contracts. So while it is their responsibility, I suppose more so than a nuclear utility, to sort of predict the future and where the market is going, those contracts that they sign give them, they're even at that lower realized price, it's higher than their production cost, right? So they're making money. That realized price that's in the high 40s or low 50s right now, they're profitable. And so even the only time that it actually hurts them is if and when they have to buy uranium at much higher prices than that realized price. But that is pretty minimal. So the company has a little bit of a hedge here, but it's as the years pass, that starts to really turn in their favor.
And for listeners out there, Justin mentioned the Westinghouse acquisition. So Westinghouse, what they make the equipment, a lot of the equipment that goes into building nuclear power plants and servicing them and maintaining them. So Cameco then they've aligned themselves with more building of new nuclear power plants going forward because they own the Westinghouse part now. So if more new nuclear power plants are built, Cameco will benefit from this then too with the additional growth in new plants.
For sure. Yeah, Westinghouse, I mean, you can't even put a price on the intellectual capital that Westinghouse has. It's literally invaluable. So they've got new builds announced. They're building AP1000 in Poland. There's a number of other AP1000 discussions currently happening. I think, like I said, I think we're going to hear more about those in the United States in the coming months. They also have the eVinci micro reactor and the AP300, these two SMRs that have yet to be built but are kind of on the development block. And so they pretty much are vertically integrated at this point, with the exception of enrichment. That's the only part of the fuel cycle they don't have, although they do have a stake in global laser enrichment. So at some point, will GLE be producing UF6 and potentially enriched uranium? Yes, I believe that they will. And at that point, Cameco can sell uranium and conversion and enrichment and fuel fabrication through Westinghouse, and potentially through Springfields is a converting plant in the UK that's owned by Westinghouse. So someday that might be producing as well. But they've got kind of soup to nuts. They can build the plant and they can fuel it across the fuel cycle. And that's kind of that I think was their vision in acquiring that 49% stake in Westinghouse. And I think hindsight is going to show that that was an absolutely brilliant move.
Very cool. And it looks like now there's actual enormous growth tailwind now for nuclear power for stable baseload electricity. I mean, no one 2 years ago was talking about data centers and all this additional growth. And now it looks like all the major economies, European Union, China, India, Japan, the United States, are all going to have to plan for huge infrastructure and electricity generation upgrades going forward now.
Certainly looking that way.
Oh, this should add more fuel to the uranium bull market because in terms of long-term investment for cheapest baseload electricity generation, once you lock in a nuclear, I mean the uranium, and you build a nuclear power plant, I mean the inputs for compared to like natural gas, liquefied natural gas, a lot of other inputs is definitely cheaper over longer periods of time.
100% agree with you.
You're truly a wealth of information, Justin. If my listeners want to check out Uranium Insider, how do they do so?
UraniumInsider.com is the best place. I'm occasionally on Twitter at this point, at Uranium Insider.